Good afternoon, ladies and gentlemen. Delighted to be kicking off the first European Retirement Week. It's a very timely initiative. The population in Europe is getting older. We're living longer and we're staying healthier for longer, which is both welcome and remarkable. Projections suggest there will be nearly 500,000 people aged 100 or older in the European Union by 2050. At the same time, the overall fertility rate in the European Union remains relatively low. This demographic shift has implications on individuals, governments, business and civil society. It provides opportunities, such as the so-called silver economy, where older people with wealth and some free time spend money earned over a lifetime's hard work. But of course there are challenges as well. There will be more people needing health and social care. So we need systems that are up to the challenge. The shrinking work-age population will affect labour markets, economic growth, social security systems and the sustainability of public finances. And we need to understand what an ageing population means for our financial system. So let me start by talking briefly about pensions and why they are important. Pensions are there to allow retired people to enjoy decent living standards after a long life of work. But not every older person in Europe has or will have enough resources to live in dignity, even though this is a core part of the European Pillar of Social Rights. The Commission's 2021 report on pension adequacy clearly shows that poverty in old age has increased. It now stands at a new average of 18.5%. Just over 16 million older people are still at risk of poverty or social exclusion in the European Union in 2019. Of course, pension policy is decided at member state level by each EU government, and there's no size-fits-all approach. But European coordination can help all EU countries to deliver pensions at a sufficient level in a way that is sustainable. And an important step in ensuring European citizens have enough income in their retirement is to complement good state pension systems with high-quality, safe and cost-effective supplementary pensions. As the European Commissioner for Financial Services, I'm committing to building a truly single market for capital across the European Union, the Capital Markets Union. Developed capital markets can support pension systems and contribute to long-term social goals like increased pension adequacy. If they are designed in an inclusive way, they could help meet the needs of our ageing population. The CMU can help Europeans invest and save for their long-term futures. The more developed capital markets are, the easier it will be for citizens across the EU to access financial products that match their needs and preferences. So when the Commission presented a new Capital Markets Union action plan last year, we made sure to include retirement saving as an action point. Our goal here is to foster transparency and support good practices. We've just published a study analysing existing auto-enrollment practices in a number of EU and non-EU countries and proposing best practices for such systems. I hope the findings of this study will inform ongoing discussions on pension reforms in several member states. We also want to identify best practices in setting up national tracking systems for individual pension rights. And we want to explore the possibility of a pension dashboard to get a better view of the sustainability and adequacy of national pension systems. So last year we asked EIOPA for technical advice on these two measures, and we expect their recommendations soon. Well-developed capital markets also require institutional investors who can invest with a long-term perspective. The Commission wants to encourage investment in the European Union and support the flow of capital towards infrastructure and long-term sustainable projects. But often large institutional investors, for example insurance companies, are reluctant to invest in infrastructure because prudential requirements mean they must hold a high level of capital against those investments. So in September, we adopted the Commission's review of the Solvency II framework. This review will release up to €30 billion of capital, fostering the insurance sector's investment capacity. And we're doing so not as a gift to the industry, but to allow insurers boost sustainable investment with a long-term view. And it will help deepen the Capital Markets Union. Like the insurance sector, pension funds hold assets worth trillions of euros and play an important role in capital markets. You will know that the prudential rules for the pension sector are set out in the Institutions for Occupational Retirement Provision 2 directive. This directive has improved the rules on governance, information provision and cross-border business, benefiting both providers and beneficiaries. And it was one of the first pieces of EU financial services legislation referring to environmental, social and governance risks. While we still need to see how these rules work in practice, we will consider the need for further steps as we prepare the next review of the directive. In particular, the Commission will assess whether the fiduciary duties and stewardship rules of pension funds should be clarified to increase their contribution to our European Green Deal targets. Occupational retirement provision has proved to be a well-established and highly successful tool in many European countries. It can reduce the burden on national pension systems and ultimately provide large groups of employees with a safer and higher pension income. To complement what's happening at national level, the Commission wants to ensure citizens also have a pan-European option to save for retirement. The Pan-European Personal Pension Product is a voluntary personal pension scheme designed to give savers more choice, provide them with competitive products and maintain strong consumer protection. Insurance companies, asset managers, banks, certain investment firms and certain occupational pension funds could offer this to their clients. The Pan-European Personal Pension Regulation goes live in March of next year. Under last year's CMU Action Plan, the Commission committed to increasing support for investment vehicles that channel financing to long-term investment projects. This month, we proposed an amendment to the European Long-Term Investment Funds Regulation. One of the key aspects of the reform is to give retail investors greater access to LTIF investments, allowing them to meet their long-term investment and saving needs while ensuring a high level of investor protection. The proposed rules will expand the range of assets eligible for LTIF investment in areas like transport, social infrastructure and clean energy. It will also provide extra flexibility for LTIF managers to set up, operate and market LTIFs. And this will give investors more long-term investment opportunities. A lot of the developments I've discussed today create new opportunities for EU citizens as they plan their futures. But they also put more responsibility on their shoulders. So it is vital that individuals have the knowledge and skills to make good financial decisions. But the reality is that many do not understand basic financial concepts like interest, inflation and the relationship between risk and return. In the European Union, levels of financial literacy are uneven across member states, and the most vulnerable groups are disproportionately affected by the lack of knowledge around finance. The Commission and the OECD are working together on a competence framework for financial education. It's about creating standards that are commonly used and recognised across the EU. It will outline the knowledge, skills and attitudes that they will need to secure their financial well-being throughout their life. We're currently working on the framework for adults, and next year we'll prepare one for younger people. As our population gets older, we need to make sure they have options when it comes to saving for retirement. European Retirement Week is a unique opportunity to come together, to think about what is working in Europe and where we can do better. The Commission is working on measures that can help national governments deliver good and sustainable pension systems. And we're developing the Capital Markets Union, which can help meet the needs of an ageing population. Thank you for your attention.